Hello traders, Nick Shaheen here looking at Netflix. So, is it a good time to buy it? Is it a good time to sell it? I don't know. Actually, I do know. Let's look at the levels on the chart. First of all, the fundamentals is up to you. Do your own homework. By the way, this here is no way, shape or form an action plan for anyone. This is my opinion as to the levels that matter on the chart. Think of it what you will. They have the first mover advantage as a company. It's not cheap, but it's growth, and specifically growth outside the US. Believe it or not, that's where most people live. And if Netflix story were to be duplicated from the US outside, then the upside is there. Otherwise, it's pretty expensive, and especially that competition, mainly Disney in this case, that's the highest profile one, although there's a whole bunch of other ones chasing it. Apple, Disney, Facebook to a certain extent, Google, YouTube, and every other channel that has now a subscription. Everywhere I look, there's somebody with a subscription. So there's definitely, like, remember Palm? They had 95%, I'm not saying this is Palm, but they had 95% of all handheld devices. And look at them now, gone. So regardless of what I believe the fundamental story is, there are lines on the chart that have to unfold. It won't get from 0 to 1,000 without passing through a whole bunch of levels. Same on the downside. So I did put it on the watch list, and you know, let me show you the lines. There are lines that stick out right away. I'm looking at a chart. This is just a simple daily chart, about a year's worth of data. And there are some lines that pop out. I do have all these lines, and I put two arrows, I should say arrows, around the points that stick out. This pointy right here, this point right here. This, to a certain extent, is the same line to me, and this right here. So if I take him back out, now you can see, okay, you've got a peak here. That was a major fail point. Forget what happened here. This was a fail point. They tried to take it back. They hit a wall, and they fell apart. They came back to it, and they fell apart less so. They came back to it. So it did trigger along the other day, but I refrained from chasing it for a lot of reasons. But they're still battling with that neckline, which is part of normal price action. Oh, by the way, before I forget, also there'll be a subscribe to this channel at the end. So hit that. It's free for YouTube. And also, you should probably change the alarm thingy to actually tell you when I post another video, so you know about it. So there are some arguments to be made, and I will make them, first of all, without the help of my lines. We'll draw new lines, so you'd see what the heck I'm thinking about. So this is the first line I mentioned. It stuck out from here. It's a pivot zone, you know, support all the way, and then suddenly they fell through it. So now it's proven resistance. There's no doubt about it. They came back to it. It was support, then it was resistance, and then they fall apart. So here it wasn't a place to start shorting it, but they did a whole bowl. And this is a secondary thing we'll talk about in a little bit. You can see another failed level there. So, but they took it out here. And they came back to it. They broke above it, but barely closed above it. Maybe they did, maybe they didn't. I'll check in a second. And then the second day, they haven't. And maybe they did it again. These two green candles are about the same way. And now they're toying with it. So I'll drill down to see the details. So now, but the good news is we have higher lows throughout, especially here, higher lows throughout. So even if it falls back down to 320, it doesn't change the fact that it's in breakout mode. It just depends where your neckline is, okay? So arguably, this is a cup and handle already broken out, so you should see, it should see about this much eyeball, the depth of the bowl, and now they retested the neckline. You see that? They broke out, they retested it. That's perfect. That's how the breakout. So this target, this is one target, which makes sense. Now this would be a secondary breakout. So there's a breakout within a breakout. So if I'm long the first breakout, I don't do anything because it's going along the same lines I talked about. So this white line here. So this is where I'm going to drill down to lower time frames. So that's the second breakout that maybe it is, maybe it isn't breakout. They broke above it, they fell back down, and now they're trying to establish it that indeed it's a secondary breakout within the first breakout. That's the first breakout right here at 315, 316. They tested it for footing, it succeeded. Now, if somebody was faster, they could have traded these breakouts here. You can see support lines, same concept at a shorter time frame. So if I go to 15 minutes, 30 minutes, maybe they'll be clearer. So these are the same lines, only a shorter time frame. You can see how the bottoms hold and serve as a base. They tested it, it held. They tested it again, it held. They ran. They broke out from here, which were two failed points, shorter term. They tested it, it worked. They came back, they lost it again. But they're still above, it all depends on how fast I'm trading. So if I was a trader off of this neckline, this is broken. But a lot of people aren't. Most people probably need 240 minute or maybe a daily. So again, trading the white line, the breakout from a while back from $316, $317 a share. So this is where answering the question, is it a time to buy Netflix? It's a complicated answer. Maybe, depends. I don't know what time frame people have. For me, if I'm a fast trader, no. I should be already long it and should be trimming and deciding when to completely exit out of it. If I'm looking for the long term, I probably want to wait out the earnings. Earnings reactions have not been friendly. This is the last earnings reaction. Hey! That was the one before it. That one, the one before that, and the one before it. So maybe 3 out of 4 were negative, 1 was meh. And I'm afraid for this time for the reports. If they don't tell a different story than last time. Last time I thought the report was horrendous. I forget the exact point I had issue with, but the market took it as yay, and then decided, wait a minute, they were trying to pull a fast one. Oh, I think what they did is they lowered their guidance, but they made it longer. They tempered their guidance and they made it longer. So way out in time, which can be like anything. I mean, anybody can promise stuff. Oh yeah, sure, I'll be great in 3 years from now. So it was like a fast move. To me, there's only one metric that matters. The only metric why Wall Street pays a lot for this stock is the fact that it can grow overseas. If it doesn't deliver on this overseas growth, I think they're going to sell it in droves. It's 109 PE. More importantly, it's about 8 times sales. So it's not cheap. But I don't have a problem with expensive stock if it's growth. So if it delivers the growth, great. If it doesn't, then Wall Street will say, you know what, we're going to take that valuation out and say, you know what, we were too exuberant on the global growth. Now, they just got nominated for bazillion awards. They make great shows, but they spend, I don't know, 18, 20 billion a year. That's insane. But that's their asset. It's the burrito for Chipotle. But if that burrito goes bad and kills somebody one day or makes them sick, well, that was ominous, then they'll take away the valuation. Same thing with Chipotle. They didn't mind paying 3-digit PE for a restaurant as long as they're returning the comps. But then they had the food scare several times. The comps went away and the stock just got cut in half or whatever. It recovered, but it took a long time. Same with Netflix. Is it time to buy Netflix? I would have to know the time frame. So for the long term, I'd rather wait for the earnings. For the short term, I'm trading it, so I better know what I'm doing. And the lines are easy to see. This is a weekly chart. It's clear to see. It's headed into resistance. So let me zoom in on this chunk of time. When is that? 2018, sometime February, March of 2018 until now. Most of the action is done between 352 and 261. That's from the volume profile. So it tells me that now we're at the upper end of that channel. What is that channel? It's just where most of the action has been. Anything outside of that is unusual. Although in this case, I may stretch the upside a little bit. So worst case scenario, I would not want to chase it above 375 until they prove to me that they can take it and use it as flooring for a continued rally. Otherwise, I'm cautious into the earnings from a commitment for the long term, but it's definitely tradable. It's in a breakout shorter term. So I know I'm going to piss off somebody somewhere. Oh man, how can you talk trash about Netflix? I'm not. I just told you it's in a breakout. And the breakout happened here. So I'm not trashing it. I'm just saying I should be long it if I'm a fast trader. And I would probably want to not hold it into the earnings unless it's a freebie. This gap is enticing, but it happened for a reason from earnings way back then. So maybe the reasons are gone, but in my experience, gaps like this take a lot to fill. Some do fill them, but it's not easy. All right, Nick signing out on Netflix.